And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB. Discover the latest trends shaping digital assets across Africa. Download the ABSA Africa Digital Assets Insights 2025. 9 minutes after 6. Good evening. Welcome to the program. I'm Stephen Grootes. Plenty to come. The CEO of Sappi, Steve Binnie, already on hold for you. We'll talk to him in just a moment about their tie-up with a Finnish company going to create large synergies, all about the graphic paper market. And of course, that's a market that, how do I put this? It's not as big as it was before the digital era. So a very, very clever way, if you like, to try and sort of manage a difficult situation. Jan Vermeulen's headed to admire broadband, the Vodacom Safaricom story, the market in Kenya growing fundamentally and very, very quickly. And if you're Vodacom, you want to get into the fintech space, well, maybe that's the right place to go to Kenya. Their economy is growing at 5% a year. I was amazed to read. It's one of those conversations where you say to a producer, really? And they go, yes. And as always with producers and presenters, the producer is right. About the fact that there is a new underground gold mine in South Africa in the Witwatersrand. It's called Kwala Shallows. We'll speak to their CEO, Rudy Daisel, in about half an hour from now. And don't forget Momentum, Signs of Success as well. Investment School tonight, we'll focus on the role of the U.S. Federal Reserve when it comes to investments. Good to hear from you. 011-883-0702, 021-446-0567, and voice notes on 072-702-1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, straight to that Sappi story today. They're creating a joint venture with their graphic paper business with a Finnish company, UPM-Kymmene. Sappi says it'll create synergies of around 100 million euros a year. Steve Binnie is the CEO of Sappi. Steve, good evening. I can't imagine the day you've had, so thank you for the time. How's this plan going to work? How are you going to run this joint venture?
Good evening, Stephen. Thanks for the opportunity. It's going to be a 50% joint venture between ourselves and UPM, as you indicated. We are the two largest players in Europe for graphic paper. We believe it's a significant opportunity, as you indicated, major synergy opportunities, and running this as a partnership, we think is the best way forward to rationalize the industry and get it back on track.
You have to get permissions from various people. I mean, your shareholders, but looking at your share price today on the JSE, I can't imagine that'll be a problem. You'll also have to get permission from regulators in different places. And I imagine part of the synergy is you'll reduce the number of people you employ, and I presume there'll be competition issues too.
Indeed. In terms of the regulators, the biggest approval we have to obtain is from the European Commission. We are the two largest players, as I indicated, in Europe in this sector. We're approximately 55% market share between the two of us. However, we are confident of being able to get that approval because of the decline that we've seen over the years for demand for graphic paper. There is significant excess capacity, and also the competition is increasing from imports out of Asia, China, and the likes. So we think we've got a strong case. With regards to the second part of your question, the synergies, big opportunities. It's very important that we rationalize the asset base across the two set of assets. So we're going to be taking out capacity, rationalizing it, fixing the product mix, and all of that will enable us to achieve the 100 million plus synergies that we hope to achieve.
I imagine you may, apart from just the synergies over the years, get some money directly into your business. You'll be essentially selling your business that Sappi owns directly now to this joint venture. Will you get some proceeds? Will you be able to use that money for something?
Indeed. Two parts to it. I mean, firstly, the deal itself, we will get 139 million euros out of the transaction. That will serve to reduce our debt. But then going forward, because of the synergies, the partnership, the opportunities that will create, we are anticipating higher profits going forward, and we will be getting dividends out of the joint venture, which once again we will use to reduce debt.
A demand for graphic design paper, it's been falling for years. I think it's less than half now of what it was, I suppose, nearly 20 years ago. So this is a very good way to manage a difficult situation. But obviously, demand for graphic design paper is only going to fall further.
That's right. Since 2007, the demand for graphic paper in Europe has declined by 60%. And the reason for that is that we've seen the shift to digital iPhones, iPads, and the likes. What we've had to do is reduce capacity over a number of years. And unfortunately, we're sitting with a situation where it's likely to continue to decline. By combining these two businesses, the two sets of assets together, as I say, 50% plus of the market share, it just gives us more options. We can put the capacity on the lowest cost machines, improve the product mix, it will improve efficiencies, costs, all of those things. So a very attractive opportunity. And coming back to Sappi itself, that allows us to focus on our growth businesses, which is packaging. And packaging, there's a high demand growth for using paper for packaging, so we can focus on that area. Also, textiles, wood fiber does go into clothing and textiles, so these are areas where we can focus going forward for growth.
Steve Binnie, I really appreciate the time. Thank you. The CEO at Sappi, 16 minutes after 6.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
Well, I saw a report on Bloomberg today about McKinsey, their Africa partner, Gregor Thiessen, just talking about how tough it's been to get back into the sort of South African market. You'll remember McKinsey during the state capture era, what happened at Eskom. They eventually paid the money, the fees they'd received at Eskom, they paid that back. And I was just sort of pondering their problem. I mean, Bain had the same problem and they eventually packed up and left. I realize that when you get into sort of graduations of which was worse or who's more evil, you don't always end up in a very good place. But I think Bain was a slightly different issue. And if you look at what they were trying to do for SARS, that all looked deliberate. McKinsey maybe not quite in the same league, but I realize we could probably, you and I, argue about that. But I was trying to think, if I was running McKinsey Africa and I wanted to get back into the South African market, what would I do? Where would I start? They did provide some services for free during the B20. I imagine that could be contested as well. I suppose what I would probably start by doing is trying to put a human face on McKinsey, because when I think of the McKinsey, I just think of, I don't know, quite rich people wearing very smart suits. I don't have any idea of what it sort of looks like from a PR point of view. The problem is what you would normally do is you would do a series of broadcast interviews. You'd come on The Money Show, you'd do some TV interviews and put a face to McKinsey. The problem with that is, my first question would obviously be, how do I know that we can trust you? And you're kind of back to the state capture era, and that's quite tricky. I don't know what you think about McKinsey right now. Do you think they've rehabilitated themselves? Do you think they can? Do you believe that they have changed? Let me put this another way. What would it take for you to believe that McKinsey deserves to do business in South Africa again? And how would you feel if right now a government department got some of the services of McKinsey and paid for those services? Voice notes, please, on 072 702 1702.
7:02.
7:02.
Stephen is on X.
At Stephen Grootes.
Well, Vodacom confirming it's spending 36 billion rand and buying a bigger share in Safaricom, the biggest network operator in Kenya. It's buying the stake from the Kenyan government, and that essentially means Vodacom will have a 55% share, so they'll have a controlling interest. Jan Vermeulen's the editor at My Broadband. Jan, good evening. Safaricom, 2/3 of the market in Kenya, presumably a lot more revenue coming from Kenya and going into Vodacom's top line.
Good evening. Yeah, that's one of the things that Vodacom highlighted, in fact, is that its revenue will immediately jump to 220 billion because of how IFRS rules work. So that's something that I think shareholders might like, and something that potentially Vodacom wanted to do for shareholders as well, is have that stuff reported directly in its financials, rather than as an associate. It's so involved in that market, this kind of makes it official.
Network operators generally, there's this sort of move away from calls and data to fintech issues. We see so much happening in that space. Optasia listing, for example. The payment system in Kenya, M-Pesa, is that a part of this deal in some way?
Yeah, absolutely. And Vodacom and Safaricom have made various announcements about this over the years. Their commitment to M-Pesa, continuing investment in M-Pesa, expanding M-Pesa. So in those markets, M-Pesa is huge. It's essentially the de facto payment rails based on the commentary that we get out of that market. So, here in South Africa, we're used to a very different way to make digital payments. In that market, it's essentially M-Pesa. That's how you pay people digitally. And so it's a very lucrative business for Vodacom in that market. It's something that they try to replicate here in South Africa, but it didn't have much success because of how mature and advanced our banking system is and was compared to Kenya's.
I mean, I would imagine even in Kenya, but in many other parts of the continent, there's still so much space left for the fintech sector generally to grow.
Yes, and even if, it's not in a hard user basis, which there's probably still room to grow there as well, there's definitely room to grow just in terms of transaction volumes because of how nascent the markets are.
Jan Vermeulen, thanks very much indeed. Editor at mybroadband.co.za.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, the rand going through the 17 rand to the dollar barrier again today. There has been some dollar weakness. Andres Elias is the director and currency risk strategist at Treasury One. Andre, good evening. We've seen the rand doing quite well against the dollar this week. Then the developments today. What's driving this?
Good evening to all the listeners. What's driving it? Well, two things. There is an inherent rand strength, and why I say that is if you look at the cross currencies, like the pound, like the euro and so forth, you see that the rand is gaining there as well. So it's not just gaining ground against the dollar, it's gaining ground across the board. So hence some rand strength. Now I think we expect Moody's to make an announcement about our rating, and I think there's some optimism that could be signaling a change for us. We're still attracting bond flows into the market because of our high interest rates, or relatively high interest rates compared to our trading peers, and the carry trade is still alive and well. The G20 went well, so domestically things are looking positive, and commodity prices is still on an elevated level. Other side of the world, rather, is America. And there, the figures coming out related to job creation and unemployment seems to be signaling to us that heading into next week's Federal Reserve Open Market Committee that we could expect another cut in interest rates as the last cut for this year. And hence the dollar is losing a little bit of its color. The dollar index is below 100. So that weakening of the dollar is also obviously assisting the rand in its strength at this point in time.
And I mean, usually when you hear a currency is weakening, you think, well, you must blame the politicians. But in this case, if I recall, the Trump administration has said explicitly they want a weaker dollar. They want that to happen.
It suits the narrative of manufacturing in America, so forth, making America great again. It suits that narrative because if you have a weaker dollar, then obviously your manufacturing could do better because your exports will do better and so forth, and you're making your imports a little bit more expensive. So from making America great again and manufacturing increases and so forth, it's the narrative of a weaker dollar is complementary to what they want to achieve.
I mean, you get a sense that the rand's building up a little bit of momentum. There's been quite a lot of good news, an upgrade tomorrow and a weaker dollar next week if interest rates are cut. I mean, is there a bit of space for the rand to do a little even better sort of early next week?
Absolutely. There is if the dollar breaks the 117 and moves closer to the 118 levels against the euro, for instance, there's a very good chance that the rand could go down and strengthen to levels around 1675. It is important, however, that we break this 17 and sustainably be trade below that level for a day or two.
I mean, one of the things that's sort of complicated to work out is if we look at oil prices, for example, if the dollar is weaker and the rand looks stronger, the oil price in dollars simply moves up a bit, which means that the rand oil price stays the same. But if the rand is getting stronger and the dollar is getting weaker, it gets a little harder to know what the rand oil price is going to be. Either way, though, if this continues, that should presumably be good news for us.
If this continues the way it is going at the moment, and we could move a little bit more into positive territory with talks between Ukraine and Russia, that could be bringing a little bit of pressure onto the oil price, and that could be good for consumers, that could be good for oil rand price, and obviously then our fuel prices. And that helps Mr. Kanyahu on his inflation side as well.
Of course it does. Andreas Elias, thank you very much indeed. Director and Currency Risk Strategist at Treasury One. And just sort of thinking about the Reserve Bank Governor and the Monetary Policy Committee, and we have a lower inflation target now, a stronger currency. The timing to keep interest rates low while keeping inflation low. Obviously, a stronger currency means lower inflation. Well, the timing may just turn out to be perfect. 26 minutes after 6.
The Money Show.
The markets.
Let's pick that up a little bit with Patrick Matidi, Head of Equities at Alawani Capital Partners. Patrick, good evening. A stronger rand doesn't lift all boats, but certainly makes us feel a little better.
Yeah, good evening, Stephen, and thanks for having me. Indeed, it is coming through, with some positivity. Not only in financial markets, but for those who are lucky enough to be traveling overseas for holidays, it does make those holidays a little bit more affordable. But I think there are quite a few factors in the rand's, sort of favor, both domestically and also globally. And it is very, very likely that this, positive sentiment may continue to next year. And I've seen numbers, being banded around of 16.5, at rand to the dollar. So we could quite easily get there, which would be great and fantastic, for the local economy and also for the outlook for interest rates going forward.
The Sappi deal, the market very happy with it. They're up, 11% on the day. They are obviously in a position where they're now rationalizing in some ways graphic paper production, this sort of joint venture with another company. I mean, in a way, it's making the best of quite a difficult situation.
Yeah, absolutely. I think the market like the fact that, at a business model point of view, it does make the ramp, as we call it, a lot more, sort of less likely to cyclicality. So it becomes a lot more defensive, especially when the focus becomes container boards, which are more geared towards, the packaging side of the industry, where there is, some relative growth compared to graphic paper. So I think that also, also the fact that they're getting money in, does clean up the balance sheet in terms of cutting debt, but also it does make the business a little less, cyclical, a lot simpler, a lot less debt, and hopefully going forward, a bit more dividends coming through. So in a way, they've kind of packaged, the more cyclical, struggling business into this joint venture, and then they're left with a business that hopefully becomes a little bit more like Mondi in terms of its outlook, and therefore hopefully getting a bit more, sort of a better rating in terms of its share price going forward.
Either way, managing a paper business nowadays has got to be a very complicated thing. There's a sort of art to managing declining demand.
Absolutely, especially if you look at Northern Europe, where there is plenty of capacity, and the market is very fragmented, meaning that, you've got a lot of, let's call it mom and pop type of mills that disable any of the players to have any pricing power. And then in a market that is declining, it just becomes a lot more difficult, especially when you do have, fairly sticky cost base to contend with.
The Vodacom-Safaricom deal on paper looks like a very good deal for Vodacom.
Yeah, it does. I mean, it does give them effective control with a 55% stake after this transaction, which means therefore that there's a bit more that they can do, given the control. But also, it brings it a lot closer to home, so to speak, as opposed to previously where it was at almost like an arm's length type of transaction. And we are seeing quite a lot of activity in this space, where it's not only, mobile network operators and, fintechs, but also somewhere in the middle you do have banks, also want to play in that space, which is the payment space where we are seeing quite a lot of the growth in terms of volumes and therefore profitability.
I mean, it all goes to reveal again, to show again how much space there is, how much growth there is in the fintech space. I mean, this is the sort of hot new era for banks, but also for cell phone networks.
Absolutely. I mean, if you look at cell phone operators, they are struggling with growth, in the traditional markets where they are hitting saturation points if you look at penetration levels. So they are on the hunt for growth, and this is fertile ground where they're willing to pay, a bit of a premium, for a piece of that action.
Patrick Matidi, thanks so much. Really do appreciate the time. The head of equities, head of multi-asset strategies at Alawani Capital Partners. Really do appreciate the time there. Well, plenty to come in the next little while. We'll talk about the new gold mine on the Witwatersrand. It's just gone 6:30.
WhatsApp Stephen
On 072
702
1702.
Well, I asked a few moments ago, what would it take for you to trust McKinsey again? They're saying that they're actually finding it quite difficult to get business in South Africa. Responses to that question?
I really don't think that we should welcome them back into this country. We don't want them back. We don't trust them. I know they may have changed management, doesn't matter. They tried to take this country for a ride. They must suffer longer, honestly. I know that sounds harsh, but in all honesty, nobody went to jail for what they did. They must not be given the opportunity to come back.
Sounds like a very friendly dog in the background, I have to say. It sounds like it's ready for its walk or something. I was reminded by someone actually a couple of moments ago, because I made the point that maybe there is a difference between Bain and McKinsey. And the person said, well, actually, Bain did sort of admit wrongdoing. McKinsey didn't. And so that might actually, now that I think about it, make McKinsey worse than Bain. Anyway, your thoughts. What would it take? What would it take for you to trust them again? And how would you feel if a government department suddenly was getting business from Bain and from McKinsey? 21 minutes now to 7.
The Money Show.
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
17 minutes now to 7 the time. Well, you, or I suppose your children, might remember that half of the gold that has ever been mined by human beings has come from the Witwatersrand Basin. Gold mining, diamond mining a bit before it, kind of did probably more than anything else to create, I suppose, really the country and the economy, the system of money we have in South Africa now. So it surprised me, and it might surprise you, to find that, 140 years, 1886, since the discovery of gold in what is now Joburg. Earlier today, a new mine opened on the Witwatersrand. It's called Kwala Shallows. The CEO of West Wits, he's also the group MD, is Rudy Daisel. Rudy, good evening. I have to say, I was surprised to find that there's still mineable mineral deposits of gold in this area.
Hi, Stephen. Thank you for having me. Yeah, no, it's a great day. It's actually a virgin piece of ground that's still there today. And, today is a big day for us. We officially started to open the mine for a mine that will produce gold over 17 years.
How deep do you have to go? I mean, was there a reason that this area wasn't mined before? I imagine technology's moved on as well.
Yeah, look, I think, we are actually mining from surface only up to 850 meters, which means it's really a shallow gold mine. But this area, I think, was purely because never mind because of the gold price, at which the time when they closed the mine, the gold price was at $250 per ounce. And then obviously with technology and the specific ore body, which were deemed as lower grade gold in those days at at these gold prices, it makes sense to mine it, and it's actually a brilliant project.
So obviously, as you say, the price of gold's at record levels.
Yes.
How expensive are you expecting your gold production to be? I suppose what I'm really asking is, what is your break-even point? Where does the gold price need to be for you to break even?
So our break-even point is at $1,281 per ounce. So at these prices, it's actually a very, very profitable project and business. So, and because we are so shallow, we are able to actually mine at such a low all-in sustaining cost.
I was going to say, I mean, I realize that the depth has a big point to play, but also,
Yes.
you're making, I mean, nearly $3,000 an ounce. I mean, that's just amazing. Are you able to employ a lot of people to do this? We've been watching the mining sector decline, especially the gold sector, over the last sort of 20, 30 years. To have a fresh new mine, I mean, good news for a lot of people in that industry.
Yes. Look, so for this phase, what we call Kola Shallow, that's really only the first phase of this project. We are going to employ 1,000 people. And our aspirations is to actually increase our production from a steady state of 70,000 ounces per annum up to 200,000 ounces per annum, which will mean that will have the potential to create a lot more jobs in that area, which is a great economic boost for that specific area.
I presume you've done quite a lot of sort of geological work on how big this sort of section of reef is, what you'll get from it. You're quite precise, 17 years of production, you reckon. Are there any other areas that you know of on the Witwatersrand Reef that could still be mined at a profit?
No, absolutely. Look, this is probably the area that have the most confidence in the geology itself because of the historical knowledge of this area. But look, we've done a lot of additional drilling and additional modeling, and then it's extremely a lot of technical work to get to this point. So we know there's more, and we believe we will be able to actually develop more.
Because you're doing this, because you're new, because it's in Gauteng, because it's shallow, there are other gold mines still in South Africa. Are you going to find it much cheaper to produce gold than they are? I mean, they suddenly have a new kid on the block who's able to do it much more cheaply than they can.
Yeah, look, I think the model that we follow, where we are, not only the shallow, but we believe in a very flat structure, and we don't believe in a lot of overheads. And the main thing for us is to really have a profitable mine rather than more assets to increase market cap. So I think the model that we follow, we believe we could produce at a lower price, and hopefully we can create more projects at these type of unit cost.
I would like to think government is welcoming this with open arms. I mean, everyone must be pretty pleased with you.
No, absolutely. Look, we had Minister Notshe today at our opening, and he was extremely positive about this, and it's great news for South Africa. It's great that we actually got some external investment in this country, and for us, it's great to develop this project and look at more growth.
Rudy, thank you very much indeed. Rudy Daisel, the CEO and Group MD of West Wits. I mean, I remember in Standard 2 learning all about the creation and the sort of organization of gold mining, the history of it in Johannesburg. There's a statue right at the border between Joburg and Ekurhuleni, across the road from one of the major shopping centers, of supposedly, the depicting the moment that someone discovered gold in Gauteng and what that meant. And still, 140 years later, another gold mine is opening. Just astonishing. 10 minutes to 7.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
702. Stephen is on The Money Show.
6 to 8 p.m.
The Money Show is in conversation with Momentum, discussing the importance of focus in the science of success. Well, you'll know we've been talking about this over the last couple of weeks, and we tend to presume that financial success comes from luck, from timing, from basically being able to earn the big money. But Momentum Science of Success campaign suggests. It's really about the science of behavior. Tonight, we're joined by Yasmin Fermi. She's just completed her money fingerprint assessment. She's a style icon, entrepreneur, and creative powerhouse. I can tell you she's much better dressed than I am. And Paul Nixon is the Momentum Head of Behavioral Finance, back with us. Good evening to you both. Thank you so much for coming in. Yasmin, the money fingerprint, it's not a sort of normal money quiz. It looks at your fears, your memories, your instincts sometimes, how you identify yourself. What was it like to sit down with a tool that's all about money, but doesn't actually ask you about money? It asks you more about the why.
It was quite confronting, Stephen. I think sometimes we don't think about those sorts of questions when we think about money. It's more as, well, I'm spending it on this, or I'm not spending it on that. You never question your behavior or why you behave that way. And I think when you consider how you've grown up, perhaps how money was spoken about, agreements, disagreements in your home, whether you had or whether you didn't, I think informs the way you behave as you sort of go on into your life in a more independent way. And I don't think we ever think about it in that way.
I mean, in your game, I shouldn't call it a game, but in your industry, there's a lot you have to really reinvent yourself. It's about fashion, it's about creativity, it's about entrepreneurship. Were there defining moments that, I suppose, shaped your sense of financial independence? A moment where maybe you thought, oh, now this is why I kind of am the way I am when it comes to money.
Well, I think, growing up, it was always, we had what we needed, but it was never more than that.
Yeah.
And I think when I graduated and got my first job, it was, okay, now what can I buy?
Of course.
But I mean, like you say, you never think about why that is so, that would be the first thing you say, what can I buy? But when you look back, you know exactly why that behavior is that way. And I think when I started the business with my friend, the business that we are in fashion, there was another sense of, oh, wow, this is really something that we can do and we are able to do it. And it was something quite liberating and another sense of great independence, because I think that's what I always wanted in my life, was to be financially independent.
I mean, Paul, Yasmin comes from a world that's kind of unpredictable. I mean, I have no idea where hems are going to be next week. I mean, fashion is deliberately unpredictable. It's about expression. But some people, I don't know what this is like, but they're in accounting, they're in medicine, they're in law. It's all you can kind of tell 15 years out, this is what I'm going to earn. I mean, those cultures around those careers, they must shape how people sort of understand and perceive financial risk.
Yes, I mean, risk is very much dependent on the person and also the situation, right? So you could very well have a sort of a doctor who is very conservative in their investment approach, and you could have others that are very sort of risk seeking, right? So that, they've studied this quite a bit as well. Entrepreneurs in general are quite risk seeking, obviously, because you're taking a lot of risk. But what was interesting about Yasmin's profile was that she actually wasn't classified as a risk taker, and it sort of came out in the conversation that it was her husband that was actually sort of prompting her, sort of nudging her on, right, to take the risk. So it's important, the lesson there is it's important as well to understand yourself, and also to understand the impact and the influences of the people around you.
I mean, there are moments, Paul, when something happens on the markets, I don't know, the Trump administration does something and you feel that sense of panic. You look at, you can imagine during certain moments during the pandemic, you look at what's happening to the markets and you think, I must do something. What's happening inside us when we do that? I mean, we're suddenly very emotional, and everyone in this game tells me that's the worst time to act.
Yes, we crave, people crave certainty. So they've done an interesting experiment as well where they actually found out that people would prefer 100% chance of an electric shock than a 50% chance of an electric shock, right? So you just want that kind of certainty. You just want to know when it's coming. So when that's taken away from us, we have this sort of impulse to act. I mean, you saw during COVID, you mentioned now, people literally, there were knife fights over toilet paper in malls, it's crazy behavior. So, that really goes same as applicable to financial markets. We use things like machine learning to understand patterns of behavior, and to study the behavior tax, or what the impact of these financial decisions are making. And of course, the money fingerprint sort of ties into the psychological aspect of those decisions. Yeah.
Yasmin, your entire career is more about meaning than about sort of material. When you look at where you want to put your money, where you want to invest your money, I presume it's sort of art, maybe it's travel, experience. What is worth the money for you? What is worth spending on?
I think I've had two phases of what I thought was worth spending money on. When I was a lot younger, I thought it was worth spending money on shoes, handbags, silly things like that. Or maybe not silly, but they were important to me at the time. But as I've gotten older, I think experiences are more important to me. I love travel. So definitely that. Art for sure. But I think travel for me, because that is, I would say that over anything.
Paul, I mean, a lot of people gravitate towards experiences now. There's a generational shift in this. They want the memories or the social media pics or whatever, and not the status. I mean, what does that reveal about how they relate to money?
Yeah, I mean, I think sort of the trend is you want to make money work for you. So, depending on what your preferences are, you've got to make, obviously, money as a key enabler of those preferences. So I think the most important thing there is just understanding the trade-off and planning. So, just understand that you're going to be sort of going overseas a bit, but, you're not necessarily going to have the yacht or the second or third or fourth house in your retirement. It's going to come at a cost. But of course, you understand, the benefit that you're getting from that trade-off that you're making. So it's all about understanding the trade-offs and making money work for you.
Yasmin, I mean, you need a really sharp eye, right? When you do what you do, it needs to be, you need to use a lot of precision. Taste is a big thing. When you manage your finances, do you see yourself doing the same thing? Has there been a time when you think, well, actually, maybe I'm paying too much attention. I'm obsessing about this?
I think I do obsess a lot. And my partner's exactly the same. We both come from similar backgrounds. So we are a lot more cautious with the things that we do. We don't just, spend willy-nilly. We find the right prices. We make the right amount. We don't overproduce. So we do keep a keen eye on where the money goes.
Paul, I mean, a lot of people, you spend time because you can on your phone now, sort of micromanaging. You're looking at the dashboard every day. I mean, how do you sort of break out of that micromanaging market? How do you get away from obsessing about that and watching TikTok and focusing on the longer term?
Yeah, that's a great question. Something we've seen, which is very interesting, is that people's engagement since COVID has increased a lot. So people are tracking these things, monitoring these things, becoming obsessed about how many hours they sleep every night, and then getting stressed about not sleeping enough. And so I think what you have to do is, and I mean, this really is a trick. It's good to have a financial advisor involved here to try and focus you on the long term as opposed to the short term things. You might do things like deleting the kind of apps, like if you're trading stocks, maybe delete the app, or maybe have a certain set of rules around, when and how you can look and make decisions around those, around stock trading, for example. But you've got to definitely try and very much focus on the long term.
And Paul, I mean, if you want to understand your own emotional wiring around money or join the Science of Success Festival, where do you start?
Go to moneyfingerprint.co.za and start there.
Paul, thank you very much indeed. Paul Nixon's the head of behavioral finance at Momentum. Yasmin Fumi, good to meet you, creative director and fashionista. Life has a funny way of testing your focus. Those moments when big decisions demand your full attention. That's when having a Momentum accredited financial advisor makes all the difference, helping you cut through the noise with advice that fits your life, because success favors the focused. It's 7:00.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025. 8 minutes after 7 the time, plenty to come. We get a tech update with Siphumelele Zondi looking at the games industry, which of course is just huge, getting bigger all the time, and you can play in so many different ways. Lunqedo Mtwentwe, the Managing Director at Advantage Advisory and Small Business Focus, he's looking at some of the places that he reckons you should go to over the December period. I'll give you a hint, none of them involve the coast. There's a particular rationale. And then investment school tonight, Asanda Notshe and Chantal Marx looking at the role of the U.S. Federal Reserve. They're due to make an interest rate decision next week and why it affects your investments. I thought that was a very interesting topic. Looking forward to that. Good to hear from you tonight on 011 883 0702 021 446 0567 and of course voice notes on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Tisa Panya sending us a WhatsApp about McKinsey, saying they were banned from doing business in the UK. They've been found wanting dealing with the Guptas. How they're allowed to get involved in the G20 here in South Africa. What was their role? I don't think they can be trusted as yet. What would have made them see as rehabilitated? It's really worrying to even think about that now. So my understanding of it is they weren't involved in the G20, but in the B20, and they've kind of provided sort of backroom services, and I think they did that for free. And I think that's actually a comment that's actually referenced in the Bloomberg article. I'd need to just go and check it again, but I think it was. And essentially, I think that is a way to try and get back. Someone did mention, though, and they might have mentioned it on the radio, I can't remember, but, you know, just something like that gives you access to all sorts of interesting people. And that access, that's those sort of networks, is what a consultancy like McKinsey wants. And would like to just make a point and make a comment to you about Oupa Magashule, who is the former SARS commissioner who actually passed away earlier this week. And I didn't have a huge amount to do with him, but from time to time, for how should I put this, various reasons, he and I would have a phone conversation about issues in the environment. And there was a time when he was quite important in terms of just explaining to me certain things. And I know that he left SARS under a little bit of a cloud. It wasn't sort of straight corruption, but he made what I thought at the time was a sort of simple mistake, and I think he probably felt a bit silly about it. He went into other things at the time. He actually ran a factory in Joburg after that was making cell phones at one point. But let me just tell you my memory of Oupa Magashule is that he was someone who was willing to share what he knew to a journalist, when not everyone wants to do that or has the time or the inclination to do that. I also felt that he was a very kind person and this is important too, someone to whom facts matter. So I know people will most likely remember him unless they knew him personally in his role at SARS. But I'll always remember him as someone who I really enjoyed just ringing up for a chat. And someone who would sort of share things, you know, nothing too special, nothing earth-shattering, nothing illegal, none of that. But just someone who I thought deserved, in a way, a better end than he received. Let me put it like that. So, Oupa Magashule, sir, I'm sorry to hear that you've left us. And I'm thinking very much of your family. I'll remember you incredibly fondly. And I hope that many other people do too, actually. If you worked with Oupa Magashule, you might want to share your memory of him.
The Money Show, Tech Thursday.
Well, time to look at the gaming industry. We, of course, have Africa's biggest gaming industry, and the Rage Gaming Expo is taking place this weekend, the biggest gaming event on the continent. I think if you think of gaming, you might think of something that you do on the phone, but gaming PCs are huge, and the industry is worth billions upon billions of rands. Siphumelele Zondi is our tech expert. Siphumelele, good evening. I spoke about PC gaming, but I mean, there's so many different types. What kind of gaming is sort of doing well at the moment?
All kinds of gaming. Hello, Stephen, and thanks very much for having me again. But all kinds of gaming is actually doing really well at the moment because you may think about consoles, but a lot of people are on their mobile devices, and we often talk about the different types of games that also sometimes include stuff that people watch and bet on. And also when you look at, for example, social media, you might even observe people competing in a video game as they are live streaming that session on various social media platforms. So all kinds of gaming is actually doing really, really well at the moment.
I mean, what makes gaming so popular? And in a way, it's a silly question. The one thing I would have to say, if you look at sort of a game being played on a PS4 or a PC or something like that, and on many phones, is the sheer quality of the production is off the charts. It is really a good example of why good execution can be so effective. The games are of incredibly high quality.
Totally. Games are high quality, but at the same time, there's also the wider availability as well of devices that people can play video games on, and increased availability of these devices with your cheaper monitors, for example, that have good graphics that people can observe video games on, and also with the increased availability of affordable internet connection, because in the past we used to hear that, for example, when professional gamers are trying to play against people who are overseas, you find that they might end up not completing a game because it would freeze in parts, latency wasn't very great. But the improvement of that has also improved, the number of people that play games, the quality of games, the quality of the experience that people are also finding, which also helps with the popularity.
I see that in Africa. I mean, PwC has an entertainment and media outlook, and they say South Africa, Nigeria, and Kenya are generating over $600 million in gaming revenue. I mean, that's a huge amount of money. Is that just on consumption?
It's both consumption. There's also an increasing a space where people are now starting to create and localize some of the content that you find in video games as well. Because in the past you find that a lot of the storylines were not our storylines, and also gamified spaces in education, for example, where there would be learning, and because the content is done through a gamified method when people are playing those video games and documenting some of what happens in their area. So there is an increasing video game creation space or development space as well that's happening on the African continent.
I know gaming can be competitive. I mean, I've listened to a teenage boy gaming when he's gaming against friends, and I mean, you know, the language. I presume it's different to leisure gaming, though. Like, really competitive gaming is quite something.
And it's also worth millions and millions of rand as well. So you find these teenagers who are competing across borders, across the world, while sitting in their bedrooms with the hope to earn money. Or sometimes you find them in spaces like the Rage Gaming Expo, for example, that's taking place in Johannesburg currently, where you find them in rooms or competing at an event like that, where they're sitting next to each other, but they're in a competition against one another, and various tournaments like your VS Gaming tournament as well, where they are playing against each other. So it's quite competitive. It's different from leisure gaming. They compete across borders. Sometimes there are events that happen in a single space, in a single room, like any sporting tournament would be happening.
Events like the Rage Gaming Expo, I mean, Siphumelele, I have to ask this question. These are gamers. Are they actually all right with human beings? I mean, do they know what to do when they meet each other?
Well, when they meet each other, yes, they'll talk about games. They'll talk about where to find their games. But the most important thing is to find out the latest trends that are available, but also to sit next to each other and compete as well. But also, people who are leisure gamers also go to such events as well, and they find out about, and sometimes they might actually even meet their favorite characters in human form when they go into these spaces.
Siphumelele, thanks very much indeed. I get a sense you're having a good time there. Siphumelele Zondi, our tech expert, talking about the Rage. Well, we'll go from gaming to the Platteland in a moment, only on The Money Show.
The Money Show, small business focus.
Well, I don't know if you've decided yet what you're doing over the Christmas season. You're probably going home or going on holiday somewhere, but a strong call that maybe you should spend your time away from the coast in some of the more, well, less explored parts of our country. It comes from Loncedo Mtwentwe, the Managing Director, Advantage Advisory. Loncedo, good evening. We know there are plenty of small businesses involved in tourism, lots of small sort of Airbnb places in the interior of the country. Why do you think we should go inland rather than to the coast with everyone else?
Stephen, good evening. Of course, from next week, everyone is basically just planning to close off. And of course, everyone wants to go to the coast, you know. And I said, there's nothing wrong with that. Especially, everyone will be heading down to Western Cape. You know, that's an obvious suspect. Everyone will be heading towards Durban, or Kruger National Park, right? So there's nothing wrong with that. Those are very important places into the economy of this country. However, when I thought about it, I said, you know what? There's still a lot more that we have in this country. And most of the time, these are some of the hidden gems that we don't actually visit. So everyone is heading to all of these coastal towns, the crowded and all of that. But if you want to experience the beauty of South Africa, the true essence of Ubuntu, small towns are some of those towns that will give you that true experience. And in my article, I talk about, for instance, some of the small towns, like if you head down, let's say, to KZN in the Midlands, you go to Nottingham Road, beautiful places, you head down to Underbeck. These are the places that are closer to the Drakensberg Mountains. And the locals, when you book there, the next day, everyone knows your name. You know, everyone checks up, how did you sleep, and all of that. And that's what South Africa is about. You know, you head down as well to Eastern Cape. I talk about, we've got the N2 now, Wild Coast Road project. It's going to start to open up more to some of the smaller towns before that we never looked at. The likes of, for instance, Port St. John's. It's a beautiful, beautiful small town in the Wild Coast. And if you want to experience the Wild Coast at its core, head down to Port St. John's. Beautiful sea views as well. So these are some of the hidden pockets that I think the South Africans, if you don't want to really go to the coast, of course, look at some of these small towns. But most importantly, it's not just about just visiting the small towns, but it's about the multiplier impact that you do when you visit, right? The locals truly appreciate visitors. And that's what I'm saying right now, that I think let's look at how we spend our money. I know most South Africans, they spend a lot of money on travel, all right? If you look at the stats, last year we spent over 200 billion just on tourism, on its own, right? So that means then there's a huge of money, there's huge opportunities that we can actually explore and basically just spread across than only just in obvious towns that we have in South Africa.
I always think, when I think of small town South Africa, I always think of the sort of Northern Cape, the Karoo, that kind of area, very different landscape to what you have in Joburg, very different to what you have in KZN. And people who, as you say, don't see a lot of people, you know, if you drive a Gauteng number plate, people are going to notice.
No, absolutely. And that's what I'm saying. That's the true essence of, that's where you get the true essence of Ubuntu. You know, everyone cares. The generosity, the warmth of South Africans when you visit them is something that we have to really look at and we have to sell to the world. I mean, talk about Northern Cape, for instance. You've got Sutherlands, right? It's a beautiful small town. Beautiful if you want to see the best views when it comes to the sky and the stars in South Africa. Head down, you know, around Sutherland. We've got the biggest telescope in the Southern Hemisphere down there, right? So these are some of these places that we have to say, listen, who goes there? You know, is it only international people or else us, you know? And that's what we have to start looking at. And I think if we do that, we are really promoting some of these small towns. We know most of the time they've got challenges, you know, when it comes to infrastructure, all of these things. But the more we show interest, I think what it does, it also pushes the municipalities to really look at the impact that if they're not maintaining these towns, you know, that it has on them, yeah?
I would imagine you also get really good value for money. I mean, if you want to, I mean, go and look at Plate, go and look at this. You'll see such a huge difference.
Yeah. The impact about this is that each and every rand that you spend, you know, in these small towns, there's a huge impact, right? And tourism is one of those sectors that cuts across, you know, it's accommodation, it's food, it's fuel, and all of that, right? And the value for money in terms of how you spend across everything usually becomes affordable, right? And security as well. And that's one of the most important part. Security in these small towns is something that you well assured. Because the locals, they know that they can't afford to have a situation where the tourists basically are either attacked and all of that. So it gives you that assurance that I know most Joburgers usually worry about security, you know. So I think that call, if some other people have not yet really looked at in terms of where they're going, consider, you know, I even wrote about Limpopo. Most people, when they think about Limpopo, they think of Kruger only, right? Go to Thohoyandou, you know, you've got a place called Tatevondo, a dam and all of those things. These are beautiful landscape, beautiful nature when you visit these places. And the more we do that and we bring these places into, as you said, into social media and all of that, people start to pay interest.
Is there also, so if you want to start a small business in one of these places, I mean, you need the local knowledge.
Yeah.
You don't need to own any property. A coach, a high ace would probably help a little bit if you could do that. But you could probably rent it for big weekends if you needed to or something, or borrow it from a friend or whatever. You don't need a lot of money, but you can have people employed. I mean, they used to say, I don't know if it's still true, that one foreign tourist in South Africa was sort of 10, I think it's 10 foreign tourists was one job.
Yeah, absolutely. So I think what is important about these places is that you'll notice most of these small towns, they depend either on one industry to really boost the economy. It's either agriculture, and everyone is just in agriculture, or being supported by government. And the biggest challenge around that, even if you want to start businesses around that, is that is government or municipality really, as I said, maintaining the infrastructure, is really coming or partnering with the locals. And that is usually one of those challenges that you usually find there. But the more we promote some of these motor, for instance, I mean, the Natal Midlands, I've seen it really grow. I've seen even the property prices now, everyone is starting to buy over there, because it was this small town that was secluded. It was very safe. So the more people come in, the more impact, basically, that you just create the economy around that small town,
Lonqedo, always so good to see you. Thank you so much, Lonqedo Ntwentwe is a managing director at Vantage Advisory.
The Money Show.
Investment School.
24 minutes now to 8 the time. So in Investment School tonight, we're going to discuss the role of the U.S. Federal Reserve, which is sort of like, well, pretty much like our Reserve Bank. And in particular, the decisions that it makes around interest rates and the impact that they have on your investments. And you'll have heard us talk about the U.S. Federal Reserve all the time. I've lost count of the number of times in business reports on 702 and 567 Cape Talk I've spoken about interest rate expectations in the US and what they're doing to US stock markets, but they have a big impact on your investments here in South Africa too. Chantal Marx is the head of equity research at FNB Wealth and Investments. Asanda Notshe is the chief investment officer at Mazi Asset Management. Thanks to you both for your time. I really do appreciate it. Chantal, let me just start with you on this. I accept that the US has the world's biggest economy for now. How important is the US Federal Reserve compared to other central banks? So if we take, say, I don't know, the Central Bank of Canada or the SARB or the Bank of England, how important is the Fed compared to other central banks?
So I think the answer lies in your introduction. The US is the world's biggest economy. So if its central bank makes a decision on monetary policy or currency issuance or foreign reserves or stimulating the economy in any other way, it has a knock-on impact on every other economy in the world. And that is just because most countries do a lot of business with the US, either directly or indirectly. And then, unfortunately or not unfortunately, I'm not sure what the answer is yet. The US dollar is the world's currency reserve. And the Fed's decision can have an impact on the value of the US dollar and therefore almost every asset in the world.
Asanda, I started by mentioning interest rates and Chantal mentioned all sorts of other things too. Am I oversimplifying it by just saying the Fed is the big issue is interest rates?
I think the interest rates are an essential part of the equation. So there's often this concept investors call or talk about risk-free rate. What is the risk-free rate? Which is effectively what the government borrows at. Now, if you look at our government borrowing rate, so the interest rate that the government pays on the borrowings that it takes on, that is actually referenced back to what the US Fed pays on its debt. So the world's, as Chantal has said, the currency, the reserve currency of the world is the dollar. So the world's risk-free rate is the Fed funds rate, effectively the starting point. So if you, to get to what our government pays, you kind of start with what they pay. Then you add all sorts of premiums and inflation differentials and so on to get to what investors would expect to pay in terms of, or rather what the government would expect to pay on debt in South Africa. So you can see how fundamentally the impact or the fundamental nature of how it's so it's just so interwoven in everything that you see then from a South African perspective and I guess other governments and other reserve banks across the world.
Chantal, I hope the Reserve Bank Governor is not listening when I put this to you, but it can sometimes seem as if we follow the Fed, that the Reserve Bank follows the Fed. Is that what happens, or is there something else at play?
So I think you firstly look internally. You see what your inflation dynamics look like. You see how your consumer is experiencing current interest rates. You look at stuff like growth. For the South African Reserve Bank, we have an inflation target. That's the mandate of the Reserve Bank, to maintain that inflation target and indirectly ensure exchange rate stability as much as they can. But to a certain extent, you also have to look at the Fed, because it's very important to maintain, so for us to maintain rand stability and price stability, we must look at what the Fed is doing. If the Fed is, for example, not cutting interest rates, but we are cutting interest rates, there's a fair chance that the rand will weaken against the US dollar and most other major currencies as well. And that can have an impact on our inflation rate. And what is the mandate of our Reserve Bank? It is to keep inflation in check. So if we're going to cut when they're not going to cut, and it's going to cause the rand to weaken, and that's going to cause inflation, it's going to be an issue for us.
So we can't, Chantal, really afford a differential between our interest rate and their interest rate. If we're moving in different directions, there'll be consequences to that. Chantal?
Oh, yes, absolutely. Sorry. No, absolutely. There will be consequences. So you will then, you could experience a situation where inflation spikes and the Reserve Bank has to renege on its cut and actually then hike rates again in order to keep inflation in check and the rand in check. So it's good to have cognizance of what that bank is doing. It won't always be a one-for-one. What I find with the South African Reserve Bank in particular is that we tend to take a wait-and-see approach. So we don't move one-for-one with the Fed, but generally over time it moves together in some form or another.
Asanda, sorry, I interrupted you.
No, I was going to just add quickly. I think there's also this idea of a carry trade, which is, to Chantal's point, if the Fed, for instance, isn't cutting and we cut, so investors all of a sudden say, well, relative to yesterday, I can now get a better interest rate in terms of the differential between our interest rate and the US. So money then flows back to the US, which is why Chantal was referencing the weakness of the rand as a consequence. So from an investment perspective, that's also, I guess, something to think about in terms of maybe from a rand perspective and therefore inflation, what the Reserve Bank here would think about relative to what's happening with the Fed.
Okay, I think I'm with you. Asanda, what happens? So if the US Federal Reserve cuts rates tonight, what happens on the JSE tomorrow? Which is really a way of asking which shares are affected by that. Is it financial shares? Is it gold shares? Who gets affected and why?
I'd say if I knew that answer definitively, I probably wouldn't be sitting here, to be honest with you. But
Sure.
let's try to answer it. I think generally, so a cut in interest rates would be signaling easing conditions. So we're not as concerned about inflation, conditions that are more looser, as it were. So in that environment, the equity market is positively impacted because, again, investors are getting less money in terms of the interest that they get from holding, let's say, money in their bank balance and so on. So it's stimulative, but also more technically, when you value a particular company, an asset, you'll say to yourself, look, I'm likely to get these types of returns or dividends into the future. But in order to get the value of that asset in today's terms, I have to discount. I have to use an interest rate to discount those future cash flows to today. The lower the interest rate, the higher that value, because you are now discounting using a lower interest rate. So that then stimulates or gives, I guess, to some degree, increases the value of assets. You could even say the way people look at, let's say, investment opportunities. So they'll say, well, relative to putting money in the bank account, I can actually, I'm getting less interest here, But all of a sudden, maybe there's more money that's likely to start focusing on new projects because there's more opportunity, because I think there's more stimulus coming through. So I think generally speaking, it's supportive. I'm loath to say which shares. I must say I don't want to put myself in trouble there.
No, sure. I mean, Chantal, how would you answer that question? I mean, does the sort of, if the US Federal Reserve, the decisions that it makes, how does that influence investment markets generally, including the JSE?
Yeah, so because everything's so connected to that benchmark interest rate or that range that the Fed provides, as I know said already, it really impacts the way that we value companies, and generally those valuations then pick up. But it can also have kind of other knock-on impacts as well. So if you think about the Fed cutting rates, usually that means a weaker US dollar relative to, let's say, in this example, the rand. And that can have a positive impact on importers, for example. Suddenly it is a little bit less expensive to import something that they go on to sell in a South African store. A weaker dollar also means higher commodity prices. So that could be positive for exporters, mining exporters or mineral exporters in particular. It's very difficult to say exactly which shares will benefit the most from it, but generally you would see a broad-based improvement in the fair value of assets globally because of the importance of the Fed as that kind of starting point for almost every rate in the world.
What happens if interest rates in the US become more difficult to predict? So, Asanda, we know that Jerome Powell doesn't like inflation. That's why he's the governor of the US Federal Reserve. He and Lesetja Kanyako, I'm sure, get on quite well. We know that the people around Trump and Trump himself wants lower interest rates, and we know that from what he said. He must cut interest rates now. So now interest rates are in a position where if I'm a straight economist and I really know my stuff, I mean, obviously I don't, which is why I'm here, but if I did, I would be able to use that economics knowledge to predict what the Federal Reserve was going to do. Now I have to factor politics into it, which is much harder. So for markets, for people like you making decisions based on what you think interest rates are going to do, it's a much harder thing to predict. And what does that mean?
Yeah, spot on. Causes havoc and mayhem. So, as you say, in the absence of the uncertain, the unknown, and unpredictable, you can sort of look at the data, and there's always these phrases, data-driven decisions that the Fed talks about. I think starts to talk to your question, starts to talk to also the element of the independence of the Reserve Bank and Federal Reserve and central banks generally, and why that's quite important. I think what you wouldn't want in an economy, a country, is where, for political reasons, there's particular pressure to go or influence or move interest rates one way or the other against what is economically sound and what would be in the best interest of the country relative to the mandate of the central bank. So if it's price stability, inflation, jobs, growth, even in the South African context, you would want the Reserve Bank to act according to that mandate and not in line with or being influenced in any other way. So it's a really tricky thing when other factors do get introduced, because it does remove that element of one being able to sort of look at the data and, as you say, predict kind of where things and interest rates are likely to go and the decisions that the Fed is going to take.
Chantal, I mean, there was a time in South Africa not that long ago when the the Reserve Bank was not independent. It is independent, it has operational independence now, and that makes a big difference. But in the US, and I didn't actually know this history until quite recently, but in the 1970s, I understand, then President Richard Nixon put intense public pressure on the governor of the US Federal Reserve to basically not hike interest rates when they actually did need to hike them. He wanted to keep the economy going. There's a bit of what you would call a sugar high. And from what I can work out, it took maybe 10 years before they were able to get that under control. It took quite a long time to get interest rates expectations, I knew that phrase was coming, and everything and inflation under control. So, I mean, this is quite risky then to mess with this.
It is, absolutely. And central banks make mistakes, but the mistakes can have very serious consequences. You can get a situation where you get runaway inflation, as was the case in the 1970s in the US. And then it is very, very difficult to bring things back under control. So it is absolutely vital that there really shouldn't be any interference with that mandate. That mandate is core and it should be followed to the letter. And I think that that is a extremely good case study of why it is so important for a central bank to maintain its independence and to have that mandate be extremely clear and sacrosanct. You cannot you cannot move away from it. And I think we've seen massive market volatility around that Fed independence question already. Financial markets are reacting to the possibility that they will be forced into doing something that they probably shouldn't be doing. The Fed has very specific, they've got a dual mandate. In South Africa, we've got the single mandate being inflation. There, you need to keep inflation under control and you need to ensure full employment. The US jobs market has weakened slightly, but it's still around about that full employment level. The inflation rate is meant to be around about 2%. It is still a way away from there. And if you look at inflation expectations in the US right now, you would be freaked out because it still isn't coming back to that 2% level. And in that environment, there's so much pressure on them to cut interest rates. I think that could have a really notable impact on those inflation expectations and make it even harder down the line.
So, Asanda, then, say, for example, the worst-case scenario from this point of view happens. The Trump administration basically puts pressure on the Fed. They can appoint a new chair soon. They cut interest rates when they shouldn't. Inflation in the States gets out of hand. What does that mean for us?
So I think it puts a lot of pressure and I suppose a lot of uncertainty in terms of what and how the markets react to what our central bank is likely to do, but actually more generally financial markets and their reaction. I think there's probably a lot of thinking and debating around how far we deviate from, I suppose, what the Fed is doing at that point as the SARB. I think our own fundamentals do definitely play a role as far as what the SARB does and its mandate. But of course, stability of the rand is something that they think about because of its potential influence on inflation, which is the key mandate that they have. I think you'd probably find that there's a fair amount of volatility in the market. People trying to, sort of grapple for new pieces of information, determining what the direction looks like. I could see things like, the risks, the safe haven assets like gold, coming into play. I mean, we're at 4,200 now. People are talking about 5,000, 7,000, because of this uncertainty. So I think adding that ingredient to this already very tumultuous pot in terms of financial markets would, in my mind, just sort of heighten risk or heighten uncertainty. In that environment, I think you find that there's a lot of volatility. People, I always like to think of it like, I always say, people wake up and they hear that somebody's selling. Then they say, well, if he's selling, then I should be selling. Yeah. Then at some point, midday, on the same day, they say, well, that guy stopped selling. Well, actually, maybe we should be buying. But that's because nobody's actually using fundamental, like hardcore data to say, this is what we should be doing or not. And so that uncertainty really just breeds that volatility.
We're talking about the role of the US Federal Reserve on Investment School tonight. Asanda Notshe is Chief Investment Officer at Mazi Asset Management. Chantal Marx is Head of Equity Research at FNB Wealth and Investments. 7 minutes to 8.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
The Money Show.
Investment School.
Just 4 minutes to go. 4 minutes till 8 o'clock. Asanda Notshe, Chief Investment Officer at Mazi Asset Management. Chantal Marx, Head of Equity Research at FNB Wealth and Investments. We're discussing the role of the US Federal Reserve on your assets. Chantal, we are seeing a situation where there's a lot of talk about de-dollarizing, just not using the dollar quite as much. You started by pointing out it was the reserve currency, and that's why it's so important. If that happens, if we rely less on the dollar, I mean, it's not going away, but if we rely less on it, does that reduce the influence of the Fed?
Yeah, Yes, I do think technically it would reduce the influence of the Fed, but you need to then consider what is your new reference currency, because then you will become dependent on whatever central banking authority oversees that specific currency and that's the monetary policy in that specific region. So let's say, for example, we are moving towards the Chinese yuan. Now you are dependent on the People's Bank of China. That is also not an independent institution. It is a body of the state. So it's a difficult one. It will just become another central bank that we need to reference.
Asanda, isn't that now just adding to the complexity? Because in the past, say 10 years ago, the US Fed, the dollar, these things we can understand. We know what sort of China is. We know it's growing. But if we understand the US Fed and it's transparent, then fine. Now you have to take into account so many other actors.
Absolutely. And the de-dollarization sort of theme also talks to this central bank buying of gold, which is also what's influenced where the gold price has gone, or one of the factors anyway. I think this really talks to the connection between economics, politics, finance, because there's sort of this shift in power, if you will, from the west to the east, the sort of multi sort of polar type environment and sort of world order that we're going into, which actually, as you say, means that it's not as easy as saying, well, here's my reference point and sort of I understand it. What's actually happening now is there's these groups that are forming. We've got BRICS, I suppose, that we're part of. There's stuff that the guys are doing in Southeast Asia. There's all sorts of things. I mean, in the continent ourselves, the Africa Free Trade consideration. So all these things are, I think it's an evolution of where the world is or how the world is developing. Yeah.
It's fascinating. Could go on forever. Asanda Notshe, Chief Investment Officer at Mazi Asset Management, and Chantal Marx, Head of Equity Research at FNB Wealth and Investments. Really appreciate the time. Thank you. Fascinating. Once you start talking about the end of independence of reserve banks, you kind of wonder where that story ends. I'll give you my view. Nowhere good.
The Money Show, Stephen Grootes, is brought to you by Absa CIB. Discover the latest trends shaping digital assets across Africa. Download the Absa Africa Digital Assets Insights 2025.
Well, talking about the US, talking about the impact on us, a mixed picture in the United States tonight. The Dow Jones down 0.05, the Nasdaq up 0.15, the S&P 500 up 0.09. The new jobs report out, but seems to send slightly conflicting messages, and I think that's a big part of what's happening. I hope you're inspired by our conversation about holidays in small towns in the Platteland. Maybe look elsewhere, maybe not for Christmas, but for another part of next year. Might just be worth looking for some hidden gems. Let me rephrase, some very cheap hidden gems to go on holiday in South Africa. We're back tomorrow. Good evening. It's 8 o'clock.